In this video, you're going to learn exactly how much money you need to start trading stocks profitably with low stress and without getting overwhelmed. So my name is Tyler Stokes, and in the first 6 months of trading real money, I more than doubled my account. And we now have a school group where there are many beginners who are up and running and they're trading within weeks, and many of them have a small account. So in this video, we want to talk about three things. We want to talk about why your account size doesn't matter, why stocks are better than options for beginners. And we want to talk about the proper mindset to trading, especially when you have a smaller account. And if you want more information on the school group and the strategy that I'm using, you'll find the first link in the description below. So let's get started and talk about why account size is relative. So basically, the amount of money in your trading account, it doesn't determine your success. You should focus on the percentage gains that you're achieving rather than the absolute dollar amounts. And the reason is, you might not be able to control, what's in your fund right now, but over time, you can increase your fund, you can earn more income, and you can continue to add to your trading account. But right now, don't focus on that if you can't control it. Just focus on the percentage gains that you're achieving rather than the absolute dollar amounts. So you can certainly start small. You don't need thousands of dollars to trade stocks. You can sign up with a brokerage like Robinhood or Charles Schwab or Fidelity, and they often fractional shares. So there's no minimum. You can start with $500. You can start with $5,000. It doesn't really matter what your beginning balance is. Now, obviously, when you earn 10% on an account that is $100,000, you're going to earn, much more than earning 10% on $1,000. But again, if you can't do anything about that right now, don't focus on it. Focus instead on percentages. So the skill is the same, whether you make 10% on a $1,000 account or 10% on a $1 million account. So focus on what you can control. And that should be focusing on your percentage gains and improving as a trader over time. And then you can add more to your fund through other streams of income. Also, focus on managing your risk. So with a smaller account, it can be easy to lose it all because, you might be tempted to make a large bet based on the size of your account, on one single stock. So if a stock is, $500 and you want to buy it and you have an account that's $1,000, then you're allocating 50% of your fund to one single stock. And that's generally not a good recommendation. So focus on risk management. Your strategy should tell you that, your entries should be 1 to 3% of your fund, and then use fractional shares to meet those specific rules associated with your risk management and your strategy. So this brings up another point of why stocks are safer than options for beginners. So I would recommend that you trade stocks with fractional shares for simplicity, lower risk, and then helps you avoid the complexity of options, especially when you are a beginner. So again, fractional shares. So these are shares where, if you want to invest in Tesla and it's, over $400 right now, and you don't have that much to allocate to that. So if, you want to make a 1% entry, Tesla's $400. If your account's not that big, then you can just invest a piece of that. You can get a fraction of that share with brokerages like Robinhood, etc. So that would be a top recommendation. And then again, avoid options. Options, they sound great for smaller accounts, but they are complex. There's time decay, there's volatility, and it tends to trip up beginners. And we actually just made a post about this in our school group. If we want to jump over to that here, on Friday, October 10th, there was sort of a flash crash in the crypto market. President Trump made a statement about tariffs with China, and many things in crypto specifically plunged like 50%. Some of these crypto coins fell a lot. And we made a post about this, just talking about the dangers of leverage and how the market can be manipulated in the short term. And this happens with options as well. So options, they can be manipulated, and they are risky, and they're generally not recommended for beginners. So, these market makers, which are these big funds, these big institutions, they can affect the price in the short term. And when you're dealing with options that have an expiration date, they can really nudge the price in a way that forces many contracts, options, to expire worthless. So we saw that with the crypto crash. We've seen that in the past as well. You're dealing with market makers that can manipulate the prices. You're dealing with timing, expiration dates. So your profits are tied to the time factor, which is risky, and it's harder to make profits. Then the leverage component is dangerous for smaller accounts. So you can come through and visit our group and read this if you wish. The bottom line is just that options are risky. Generally, for beginners, you're going to lose money with options, and it's just best to avoid those. So stick to simple stocks. Buy bullish stocks with clear momentum. That's the strategy that we follow. It's really hard to lose money, especially in a bull market. There's no expiration dates to your share. So, if they dip, you can just hold on to them and wait for them to recover. It's way less stressful. It's better for people with smaller accounts. And it's just better for beginners in general. And then third is we want to focus on the proper mindset. So we want to focus on, growth for trading rather than income for trading. So focus on building long-term wealth through disciplined momentum trading, not risky bets for quick cash. And it's important to shift your mindset, especially when you have a small account, because if you're looking for quick cash, you're going to make risky, impulsive trades, and then you're at higher risk of losing your entire account. So I would recommend that you don't treat trading like a job initially. Trading to pay the bills leads to risky, emotional decisions like over leveraging or chasing. We actually made a video, which I'll link in the description below, about the 5 emotional traps of trading. Many of them have to do with various emotions that creep up. And some of these are enhanced by those that are beginners with smaller accounts. So I'd highly recommend that you check that video out. So don't treat trading like a job. Focus on the long term, aim for steady growth, low stress trades, compound small wins over time. And again, your starting balance now, can improve or can grow based on you earning more income throughout this year and continually adding to your fund. So don't just think to increase your trades and double your account just to pay bills. That's generally not recommended. Focus on more of the long term. And again, keep emotions in check. So find a good strategy, trade with money that you can afford to grow, and focus on patience, not paycheck. So it's a big mental shift that's important for the long-term success of your trading. And again, if your starting balance now is small, over time, you can definitely grow that. So it's better to focus on trading, compound your wins over time, rather than risk your small account on options for risky strategies in general. So just a quick review here. Small accounts work. Focus on the percentage gains that you're achieving, because you can't necessarily control the fact that your account is small right now. Over time, fund your account with other income and grow it slowly, and you're going to be a much better trader in the long run. Use fractional shares instead of options. So if you have a small account with maybe $1,000 balance and you want to buy some stocks that are over $100, consider a brokerage that offers fractional shares, and you can meet your entry accumulation requirements based on your strategy. Trade to grow your wealth. Don't chase income to pay your bills. It's usually probably not going to work out for you if you do the latter there. And that's it. So, if you'd like to learn more about the strategy that I'm currently using, that many beginners are using, and they're up and trading in weeks, you can find the first link in the description below. And then on the screen right now, I'll put up that video about the 5 emotional traps with trading. It's important for beginners to kind of understand those and avoid those, especially if you're starting with a smaller account. So thanks so much for watching, and I'll talk to you in the next video.